There's a whole lot of growing going on in this one. Hold on to your portfolios, folks. This is going to be a good one. Diversification across multiple sectors is the best way to ensure you have a healthy portfolio that has a better chance of weathering sector-specific storms. For example, if you had only invested in the banking sector, your portfolio would have taken quite a beating in the last year. Spreading out your investments is that whole not putting all your eggs in a single basket approach to investing. It is easier to lopside your portfolio than you may think. When you are looking for those great returns, often it may be a sector booming, and as a result, all the top returns are from that sector. It wasn't that long ago that the energy sector was that boomer, dominating the top best of the best stocks. The good news is that most sectors have their superstars, and with a little digging, you can find those gems in a more diversified spread. That is exactly what we're going to be doing here today. I found a top return producing stock in every sector, and I then ranked them so that we have the top 5 sectors and the gem from each. This is going to be exciting, and I expect we are going to see some crazy numbers. Join the conversation. Let us know in the comments your current top performer in your portfolio. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and a huge thank you for that click. In putting together this list, we had a few criteria that each company needed to hit for consideration. First, the company for each sector needed to have a positive return on the year-to-date, 1 year, and 3-year time frames. They also needed to have a share value greater than $10. In addition to that, there could only be one company for each sector, and we narrowed it down to the top 5 ranked by their total return for 2023. So without any further ado, well, let's do this. Kicking off this list, we will begin with the consumer staples sector, and we have Molson Coors Canada with a ticker of TPX.A. Based out of Gatineau, Quebec, they are a huge global brewer and distributor of beer and malt beverages. They have a market cap of $18.93 billion and a pretty stable beta of 0.83. Their earnings per share come in at 0.26, and their PE ratio, a little bit out there, it's 353.27. Their return on equity, that comes in at 0.31%, but a little bit nicer, their debt to equity ratio comes in at 49.4%. Their dividend yield comes in at 2.308%. That is paid out quarterly in the amount of 53 cents per share. The payout ratio on that, crazy high, 819.27%. This is a very high payout ratio, and it's, of course, it's not sustainable. If they do not increase their cash flow, then we are looking at either a future dividend cut or a company taking on more debt to cover the dividends. They do have room to take on more debt, but is it really necessary when most of their return is coming from their growth opposed to, well, the dividends contribution? Another issue that we do need to touch on is that Molson suspended their dividend in the early part of the pandemic. They did not give a dividend from July 2020 until they started it back up again a year later in July 2021. Let's take a look at their returns. On their 3-year return on investment, that comes in at 83.70%. Add in the dividends, we get 91.49%. On their 1-year return on investment, that comes in at 30.28%. Adding in the dividends, we get a total return of 33.25%. When we look at 2023, their return on investment comes in at 31.21%. Add in the dividends, we get a total return of 32.79%. These gains are absolutely great, but I will say I'm not 100% sold on their fundamentals, and this is a company I am slightly cautious with, so this first one is a probable pass for my portfolio. Coming in at number 4, we are jumping into the materials sector, and we have Stella-Jones with a ticker of SJ. They are based out of Montreal, Quebec, and they produce and sell, well, lumber as well as lumber products. Their market cap comes in at $3.75 billion and another stable beta at 0.70. Their earnings per share comes in at 4.43, and they have a price to earnings ratio of 14.60. Their return on equity, that comes in at 16.76%, and they have a debt to equity ratio of 82.25%. When we look at their dividend yield, that comes in at 1.422%. That is paid out quarterly in the amount of 23 cents per share, and their payout ratio, a lot nicer, 19.41%. Moving into their returns, their 3-year return on investment, that comes in at 40.84%. Add in the dividends, we get a total return of 45.92%. On the 1 year, that return on investment comes in at 59.97%. Add in the dividends once again, and we get 62.17% for their total return. For 2023, their ROI comes in at 32.51%. Factor in the dividends, we get a total return of 33.45%. That's not too shabby. This really does look kind of fantastic. They have some great returns with some very good fundamentals. I may not hold this one, but there's nothing that would stop me if I ever wanted to add them, that's for sure. Taking our third spot, we are dipping our toe goes into the energy sector, and we have TerraVest Industries with a ticker of TVK. They are based out of Vegreville, Alberta, and they are a manufacturer of home heating products, propane, ammonia, natural gas transport vehicles, just to name some of their wares. Their market cap comes in at $650.94 billion, a very stable beta of 0.59. Their earnings per share comes in at 2.50, and they have a price to earnings ratio of 14.54. Their return on equity, that comes in at 25.74%, and their debt to equity ratio a little higher than I like, 124.32%. When we look at their dividends, their yield comes in at 1.376%. That is paid out quarterly in the amount of 12.5 cents per share. They have a payout ratio of 19%. When we look at their returns on the 3-year return on investment, that comes in at a nice looking 151.66%. Factor in the dividends, we get 160.49%. On their 1-year return on investment, that comes in at 46.24%. Factor in the dividends once again, and we get 48.15%. When it comes to 2023, the return on investment comes in at 32.63%. Factoring in the dividends, we get a total return of 34%. That's not too bad. Once again, we got another nice one. I would love to see them lower the debt, but nonetheless, they are killing it with their returns. In our almost top spot at number 2, we are jumping into the financial sector, and we have Fairfax Financial Holdings with a ticker of FFH. They are based out of Toronto, and they are involved in insurance, both property and casualty, as well as investment management. They have a market cap of $28.04 billion, a fairly average beta of 0.91, and their earnings per share come in at 136.18. Their price to earnings ratio, that comes in at a very low 8.32, and their return on equity comes in at 12.49%. When it comes to their debt to equity ratio, it's a nice low number, 35.80%. When we look at their dividends, they do have a yield of 1.207% that is paid out once a year, so annually $10 USD per share. That payout ratio nice and small at 9.93%. Looking at their 3-year, on the 3-year return on investment, we get 186.09%. Factor in the dividends, we get a total return of 193.67%. On the 1 year, their return on investment comes in at 74.29%. Adding in the dividends, their total return comes in at 75.82%. Looking at this year, 2023, their return on investment comes in at 41.25%. Add in the dividends, we get a total return for 2023 of 42.50%. This is a very stable, though high share price to enter option that has some very nice returns. Luckily, if you are using Wealthsimple, it is available as a fractional purchase. In our top spot at number 1, we are jumping into the very hot industrial sector, and that takes us to Hammond Power Solutions with a ticker of HPS.A. They are based out of Guelph, Ontario, and they design and manufacture custom electrical magnetics, cast resin, custom liquid filled distribution and power transformers, as well as standard electrical transformers. We have seen this company before, and it should be no secret that I love them a lot. They have a market cap of $652.51 million, pretty stable beta at 0.79. Their earnings per share come in at 4.94, and they have a price to earnings ratio of 11.10. Their return on equity, that comes in at 34.24%, and an incredibly low debt to equity ratio of 14.22%. Love that. When we look at their yield, it's not big. It's a 0.912% that's paid out quarterly in the amount of 12.5 cents per share. Nice payout ratio of 9.11%. Let's look at these returns up. On the 3-year return on investment, that comes in at 792.67%. Factor in the dividends, we get a total return of 809.69%. Holy banana bread, that is absolutely insane. Their 1 year is pretty impressive as well. On the 1-year return on investment, it comes in at 215.91%. Factor in the dividends, we get a total return of 218.50%. Looking at this year, in 2023, their return on investment is 168.81%. Factor in the dividends, we get a total return of 170.03%. When I said I love this company, I think you can see why. I do hold this company in my portfolio, and in 2023 so far, I have close to $600 in profit already. This stock has just been an awesome grower in my TFSA. Without a doubt, some of these stocks we have looked at today are absolutely breathtaking. However, as nice as they sound on YouTube, you still want to be sure to do your due diligence before you even think of dropping any of your hard-earned cash on the table. Keep the learning going. Watch my video on Northwest Health, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.